This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September 28th, 2012. Our time is 8:44 Mountain, 10:44 Eastern. Our radio show runs AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. If you ever miss a radio show, we have a podcast through iTunes. Get iTunes on your computer, on your smartphone, and you can take us anywhere you go. Also, Harold's websites, rarecoloreddiamonds.com and HESradio.com, have the shows archived, and you can download them and listen to them anytime you want. We are there for you. And as we start today's show, we say happy 30th anniversary on Tuesday, October the 2nd, to Harriet and Harold Siegel. Harold, happy 30th anniversary. I know you spent a little time in California last week. Congratulations, and we say happy anniversary to you and Harriet.
Well, thank you very, very much, Randy. I really appreciate that. 30 years really went by quickly. You know, the thing is that Harriet and I only knew each other 2 weeks before we got married. Been married 30 years now. And the crazy thing is that her father's name was Harold Siegel.
Very strange.
Very strange, but fabulous marriage, and love her very much, and it's been a great 30 years. And I appreciate that very much, Randy. Anyways, the markets were good this week. Again, it was a high Jewish holiday this week, so basically, you know, the markets didn't trade on Wednesday, and a lot of the traders are Jewish in New York, so, you know, the market was fairly thinly traded. But on Thursday, the market was up very heavy in gold and silver and in oil. In actual fact, some decent news was coming out of Spain, so the fact is gold was up about $25 on the day. So as we're taping the show on Friday, gold is trading right now at $1,780. We need to break 1,800. It's not a major resistance. The major resistance that we have to get through is 1,900, and we should do that easily before the end of the year. The silver market's trading right now just slightly below $35. Silver is extremely bullish. There's major shortages in silver. Silver is greatly undervalued, and I believe silver is going to break 50 by the end of this year and go substantially higher next year. Platinum is trading up $12 today, is trading as high as $16.77. Palladium is trading at $646. You've got the oil market trading up at 92. The U.S. dollar is below 80 cents and should continue to fall substantially over time. And the Canadian dollar is at a premium to the U.S. dollar. So the Canadian dollar is trading at 101.80 as we speak right now. And as the U.S. dollar continues to fall, you'll see that the Canadian dollar and other currencies will strengthen tremendously. Now, this is extremely important, that what we're going to talk about at this particular point. You know, for the 11 years that Randy and I have done this show, we've always talked about inflation, but I've never been more positive than I am right now as a result of last week when the government and the Federal Reserve announced QE3 and possibly even QE4. That's quantitative easing, where they're going to print a ton of money and put it back into the system to somehow try to get employment going and the economy going again. It never worked the first two times to any great extent. You know, the chances are it won't do the job the next couple times they're going to try it, but the Federal Reserve came out and said they're going to do it to infinity, and we know what that's going to bring, which is massive inflation. So it's extremely important that we prepare for the one major occurrence that's going to happen, which is inflation. It doesn't matter how much money you have. You can still protect yourself. You don't have to be the Warren Buffetts of the world or a multimillionaire in order to protect what you have. Everything is relative. And the fact is that if we are going to have inflation, and by the way, there's absolutely no doubt that we are going to have inflation. Not only do I feel it, and I've been through this before in the 79, 80 markets when we saw interest rates go to 22%, but the fact is some of the most brilliant minds in the world are saying the exact same thing. So we are going to have inflation. We have inflation now, but nowhere near to what it's going to be in the next 4 to 5 years as the Federal Reserve continues to print more and more and more money, which reduces the value of the U.S. dollar at a time when oil prices are skyrocketing and food costs are skyrocketing because of the drought that the U.S. had this year. So the bottom line is that if you don't prepare for inflation at this particular time, the chances are you're never going to get a chance to do it again. The markets are at least at a reasonable enough level in order for you to continue to hedge against inflation. Now, when we first started doing the show 11 years ago, gold was at $250. It's now at almost $1,800. A lot of people out there will say, well, I missed the move in gold. It's way too expensive. How in the world am I going to buy it? Well, the fact is that it's all relative. Gold is trading at $1,800, but it could very easily be trading in the next 4 to 5 years at the $4,000, $5,000, or $10,000 range. Depends on how high inflation is going to go. The real buy in the market is silver. Silver is trading at $35 at this particular point. It's been as high as $50. It could easily go to $150 to $200. So the fact is that where gold is expensive, silver is not expensive, and silver will catch up to gold percentage-wise. So we feel at this particular point that silver, just like in 79 and 80, lagged behind gold and platinum for most of the bull market, but then silver took off. And if you look at the charts on silver, you'll see exactly what I'm talking about. Silver went in a straight line upwards and basically brought the ratio in gold and silver down to 16 to 1, and I do believe the same thing is going to happen at this point. So, again, silver is probably the best buy in the metals at this particular point, but don't forget, we are conservative. We buy physical metal and hold it. We don't trade this market. So, basically, when you look at the cost of gold, who's going to buy gold at $1,800? It's the futures traders, because they only have to put up a small percentage of that $1,800, and it's 100-ounce contract. So they only have to put up maybe 10% of what the value of the contract is, so they can continue to trade it, and they can take the risk. We're not risk takers here. We're buying gold and silver and diamonds for one reason. We know that inflation is coming. We want to protect what we have, so our assets and our investments will go up in value and compensate for the higher price of living, which is going to be in oil and food. So again, at this particular point, in 1980, we had massive inflation in North America and throughout Europe, and it took interest rates all the way to 22%. A lot of us remember 22% interest rates. A lot of us at that particular point were just getting started in life and buying our first homes, and 22% interest in Canada and in the United States was detrimental to getting anything done. But that was the result of extremely high inflation. That's what the Federal Reserve had to do. They had to raise interest rates in order to raise the value of the dollar, and by raising interest rates, eventually it got rid of inflation. And we're going to have to go through that extreme situation also. So we might as well prepare for it right now, because what's going to happen within the next 5 years is that inflation is going to get to be so high that the Federal Reserve is going to raise interest rates to 10, 15, 20%. And you may think that that's crazy, but the bottom line is that it's going to happen gradually. They're going to start to raise interest rates, and they're going to see that it does absolutely nothing. Then they're going to raise it more, and then they're going to raise it more, and then the rises are going to be larger and larger. Then they're going to raise it by 2 and 3% at a time, because, again, the risk is way too high, and before you know it, we're sitting at 15, 20% interest rates. Now, the fact is that if you haven't done anything, if you haven't hedged, if you haven't bought any physical gold or silver or diamonds, you're going to suffer tremendously. You're going to see that your dollar is not going to buy as much. You're going to go through massive inflation, and you're not going to make any money on it if you don't invest in the right markets. My suggestion very strongly at this particular point is to buy physical silver, physical gold, and physical diamonds. Those are the three assets that will go up during times of high inflation. They did it in 1980. They'll do it again this time. In 1980, gold went, from 1972, gold was at $125. By 1980, with high inflation, gold was at $850. Went up 800%. Silver went from $1.25 all the way up to $52. You saw the move that silver made. We're looking at the same scenario. Oil skyrocketed. Diamonds went up 500% in 2 years. $20,000 diamond went to $100,000 diamond in 2 years because of inflation. So now we've got this scenario again. We've got massive inflation coming our way. We've got the exact same scenario, except worse than we had in 79 and 80. And here's what the game plan is. If interest rates are going to skyrocket, if inflation is going to skyrocket, and you own gold and silver and diamonds, those assets are going to skyrocket. Your stocks are going to fall. your real estate is going to fall, but your hard assets of gold and silver, diamonds are going to climb substantially, and that's going to offset the losses that you're taking in other areas. In actual fact, if you do this correctly, you will actually end up making an awful lot of money in your hard assets of gold, silver, and diamonds, and then the exciting thing is that if interest rates do go to 22% like we predict, you're going to be able to put your money in the bank and make 20% on your money just by putting it in a certificate of deposit without even taking a risk. So again, this is probably one of the most important times. We got confirmation last week that the Federal Reserve is coming out with quantitative easing 3. They're going to print and print and print and print. And what happens when you print as much money as they're printing, it reduces the value and the buying power of the dollar. And with oil prices high and food prices high and your dollar buying less, that's inflation. And if you don't have the right investments that will go up with inflation, then you're going to suffer tremendously. Now, this was something that surprised me tremendously. It's in the newsletter. By the way, the newsletter this week is one of the best newsletters Randy has ever done. The section on the world events is phenomenal, and the section on diamonds is probably the best that we've ever seen. But also, in the newsletter, there was a report that came out that you want to read. And it's called, As Clinton Sounds the Interest Rate Alarm, Does Congress Think It's for Real? Well, President Clinton is a brilliant man. And what you've got to do is you've got to read this article because he's saying the exact same thing that I'm saying, which is that interest rates are going to skyrocket. And if they're going to skyrocket, let's make the money now. Let's get our positions in the market and make money as inflation goes up. And then when we sell, we're going to be able to take advantage of a very high interest rate. So, again, these are action-reaction type of markets. A weak currency is inflation. High food costs brings on inflation. High oil costs brings on inflation, and all three of those scenarios are in the market at this particular point. Quantitative easing 3 and quantitative easing 4, there is no doubt will bring on massive inflation, as did quantitative easing 1 and 2. You saw what happened to the markets in gold, silver, and even in stocks when they put that money back into the market a few years ago. So you can sit back and you can say that there's nothing that you can do about it because you're a small fish in a big pond. But that's the furthest thing from the truth. It doesn't matter what you have. The fact is that it's all relative. If you've got $1,000 to invest, buy $1,000 worth of physical silver. If you got $20,000 to invest, you may want to diversify a little bit more. If you got $100,000 to invest, you're definitely going to want to buy some physical gold and silver, and you definitely want to get into the diamond market. It's going to make you a tremendous amount of money. So this is the areas that we're talking about. There's two major areas of massive concern. One of them is the United States, and the other is Europe, and both of them are going to fail financially, and we've got to make certain, as smaller investors, that we don't fall with them. There's things that we can do that make perfect logical sense. We've been through this before, so we have the experience of trading these inflationary markets. I've been in this business 35 years. I traded the markets back in 79 and 80, and I'm ready for it again. We were the first ones to alert you that we were going to have a massive rally in precious metals 11 years ago, and in oil and diamonds 6 and 7 years ago. So the fact is that we're on top of this. We've been through this before. We have the experience to let you know and to guide you through these difficult waters, and we're going to come out of this doing well. As I've always said, 90% of the money is made by 10% of the people, and the only thing that Randy and I care about is that our Canadian clients and listeners that have been loyal and listen to the show get through these difficult times and prosper, and that's exactly what we're going to do. It's extremely imperative that you get this week's newsletter, understand how severe the situation is worldwide when you've got countries going bankrupt and currencies being debased, and there's something that we can do as investors that will protect our families, and we can prosper from it. So again, be conservative. Don't speculate. Don't leverage anything heavily, and own physical gold, physical silver, diamonds, and invest in oil, and that will get us through these next 5 years, and we will do tremendous and make an awful lot of money, and hopefully be able to put our money away at 20 or 22% 5 years down the road from now.
Inflation, it's that silent killer of our capital, our money. And it's interesting, in the newsletter this week, Pierre Lassonde, we have a quote from him, a mining executive. He says, don't be surprised to see $2,000 gold in the next 6 months. He says, ultimately, my view is that we're in a 15 to 20 year bull market in hard assets. mostly in gold and silver, if you want me to be specific. We are in about year 12, so we have many years to go. Read that quote and many others. Get our free weekly newsletter from the company Harold recommends you use when it comes to investing in precious metals, worldwide precious metals. Their telephone number, 1-866-623-2002. 1-866-623-2002. Their website is wwpmc.com. wwpmc.com. Let them help you create a financial firewall around the money you have today. That killer inflation is out there waiting to spring due to quantitative easing to infinity. Let them help you start your own precious metals investment account today. They will educate you as to why you need to have an allocation of precious metals. Give them a call today, 1-866-623-2002. The website is wwpmc.com. And really, it all comes down to monetary policy. That's why we're in the position that we're in. Michael Pinto said this week, the worldwide currency debasement war has now entered a new and more likely deadly phase. Central banks have escalated the combat plan to bring about the world's weakest currencies for their individual countries. You just cannot ignore the fact that governments and central banks are engaging in a global currency war. But we already know who the losers in this battle will be. The middle class and the economies of the developed world. There will be no sustained economic growth until central bankers make peace with their currencies and put aside the notion that prosperity can come from inflation. Until those in charge of fiat currencies reach that epiphany, the only winners will be those that can afford to place a significant portion of their investments in hard assets. Also, Keith Barron said this week, and all the things I'm talking about on today's show, you can get in our newsletter. Keith Barron said, I don't think they can stop the printing money now. They are down the road of no return. I've seen this happen in Russia. I've seen it happen in Brazil. I lived in Brazil for a few years and saw it happen twice. The currency went to zero. Then you pressed the start button again, and away you go. That's probably what's going to happen to America. This is not the first time. It happened during the Continental Congress. It happened during the U.S. Civil War. It's a very sad commentary on history, but it looks like it's going to happen again. Now's the time to have that financial firewall. Speak with Worldwide Precious Metals. Connect with them at 1-866-623-2002. The website is wwpmc.com. Those are extreme positions. Even if they're half right, 25% right, you still need to have that insurance policy in your portfolio of hard assets. It was interesting this week. Guggenheim Partners Chief Investment Officer Scott Menard gave his outlook for gold prices, and he made a case for $10,000 gold. We talked about $10,000 gold on the last show. You can watch the video of that. We have a link to it in our newsletter. Bank of America came out this week and said gold prices could hit $5,000. In fact, their analysts say the metal could soar to $3,000 or even $5,000 over the longer term. We will be focusing on gold. Ultimately, we think gold can trade between $3,000 to $5,000 an ounce going forward. McNeil Curry, head of the Foreign Exchange and Rates Technical Strategy Team at Bank of America, told CNBC, certainly not within the next few months, but on a long-term basis, we are on a defined, well-defined uptrend, and we've got more to run before it runs its course. And one thing we always use is the gold to silver ratio as a guidepost. And in our newsletter this week, we have the guidepost of $2,000 gold and $2,500 gold, and maybe we need to, in the next newsletter, I'll put $3,000 and maybe $5,000 as a guidepost. We have a gold to silver ratio of 50-1 right now. $2,000 gold gives us $40 silver, a nice $5 move from where we are today. Now, if the ratio improves, which we believe it will over time, 40-1 gives you $50, 30-1, $66, 20-1, $100, and 15-1, $133. Now, if you have $2,500 gold, A 50-to-1 ratio, $50 for silver, 40-to-1, $62, 30-to-1, $83, 20-to-1, $125, and 15-to-1, $166. Next week, we will talk about $3,000 and maybe even ultimately $5,000. But right now, a lot of people believe, including Cesar Bryant, who's a money manager of precious metals in the United States, silver is the leveraged play to gold. The high from the middle of last year was just under $50, and that will be easily eclipsed as gold breaks to new highs, according to Cesar Bryant. Harold, obviously, silver is poor man's gold, and you can buy a lot more silver right now than you can gold. But I think one thing people have to get their heads around, and we've been doing the show for a long time, there are people who maybe didn't buy at $4 and they thought $8 was expensive, and then it went to $16 and $20 and $30 and up to $50 ultimately, and where we are today around $35. But if we get to those numbers of $50 again and up to $100 that people are projecting, $35 today is going to look very, very cheap.
You bet. And again, I believe it is, because we have seen $50 silver all the way back in 1980 when gold hit $850. So the fact is, when we first started doing the show, and I do remember like it was yesterday, when we recommended it, people thought that we really didn't know what we were doing. And it wasn't a very popular show at the beginning, but when we recommended gold at $250 and silver at $3.80, we had some believers, but not an awful lot. When gold finally went through $300, more people jumped on board, then $400, then $500, then $600. Who would have ever thought that gold actually could have gotten to $1,800 or $1,900 all the way from $250? We believed it. Other people believed it. We have many, many clients that own gold physically from $250 and silver from under $4. So the proof is certainly there. The bottom line is that now we're talking $4,000 to $5,000 gold, and it's not unreasonable, because the fact is that what pushes gold up is bad news, and inflation is bad news for the economy. 22% interest rates is bad news for the economy, but that doesn't mean it's not going to happen. And if it is going to happen, don't you want to be in it? Again, I can certainly understand that not a lot of people will have $1,800 to buy 1 ounce of gold. And when we call silver the poor man's gold, it's only because it's less expensive. The bottom line is that the fact is that silver made an awful lot of people wealthy over the last 10, 11 years, and it also did it back in 79 and 80. The thing is that we didn't know how to trade silver back in 79 and 80, and we had that huge move in silver to the upside, and then it plummeted because they closed the market down for a few days. Now we know what to expect. We understand how this market is volatile. We understand the hedge funds and everybody that's in the market, but we're not in that heavily leveraged market. We're in the cash market. We're in the physical market that doesn't have that risk. We can hold on to our gold, and it doesn't matter what the day-to-day movements are. I very strongly suggest, with what's coming, that you take our advice and you buy some physical silver and you put some diamonds away. We're not only going to get through these difficult times by doing that, we're going to make an awful lot of money and be able to take advantage of 22% interest rates. If you don't do it, we're going to suffer tremendously, because the cost of inflation is going to hurt tremendously. And for those that have not gone through it before, you're going to feel it substantially, and there's no reason that you have to do that. If you've been an active listener to the show for 2 years, 5 years, 10 years, whatever it's been, you know that we've been very accurate on these markets. I've been through this before. Please do the right thing for your family. Get some hard assets while you can still get them, because when this market really takes off like it did a couple years ago when it doubled in a few months, we're going to see that happen again. And all we want is for the listeners to our radio show to get through these difficult times, to prosper, and to be ready for what the next major bull market is after that. 1-866-623-2002, the website wwpmc.com, to learn more about investing in precious metals. Going to come back and talk about diamonds and some auction results as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September 28th, 2012. Our time is 9:09 Mountain, 11:09 Eastern. Our radio show runs in Toronto, AM 640, QR 77 Calgary, and 630 CHED in Edmonton. The company Harold recommends you use when it comes to investing in precious metals is Worldwide Precious Metals, a Canadian company in business for over 10 years.
They can help you manage your precious metals investment account. You can trade the market if you want, buy and hold your metal. They are there to help you maximize profit, minimize risk, the experts in a very specialized market. Stay away from people that don't understand precious metals. The physical metal can be stored on your behalf, delivered to your door. Lots of different ways to invest in this market. It's a liquid asset you can buy and sell with a phone call. Learn why you should have an allocation of precious metals in your portfolio today. The telephone number to connect with them, 1-866-623-2002. The website, wwpmc.com. And it's that time of the show where we talk about diamonds. Harold's website is rarecoloreddiamonds.com. Connect with him on the phone at 1-800-432-1022. And his auction site, we'll have more auctions in October, is hsfineauctions.com. hsfineauctions.com. Go and take a look around. rarecoloreddiamonds.com. It's like a museum for diamonds on the internet. 1-800-432-1022. Our featured diamond this week, which you can see in our newsletter. You can get our newsletter from Harold. We have a weekly newsletter. We have a monthly newsletter. This week's diamond is a 0.41 carat emerald cut fancy purplish pink argyle diamond. And you can see video of that diamond and get more information by speaking with Harold Siegel. This week, we had an auction. Actually, last week, we had auction results from Sotheby's important jewel sale in New York City, September the 12th. And we have those auction results. Be happy to send them out to you. Two of the highlights. Lot 490, property of a lady. Fancy light pink diamond. The estimate on it was $500,000 to $700,000 US dollars. It sold for $1.4 million. Also, lot 391, gold and fancy intense orange pink diamond pendant. A beautiful pendant. The estimate on it, $350,000 to $450,000 US dollars. The lot sold for $770,000 US. We have lots of auction results, Harold. Very exciting news out of Sotheby's last week. And it's a great time to be in the hard asset of diamonds.
You better believe it. It is very, very exciting. With the Argyle tender going on, pink diamonds are all over the news. In actual fact, I mean, look at that fancy light pink diamond. Light pink is not one of the most desirable colors, even though, I like the softness of a beautiful light pink diamond, especially the round one. And this is a round diamond, which there's a premium to it on some of the rarer cuts. But this particular diamond is just over a carat. It's a fancy light pink. To give you an indication as to what that means, the way that the Gemological Institute of America grades pink diamonds is that the lowest color is a faint pink, where you can barely see any pink at all. Then it goes to very light, and then fancy light. Then it goes to fancy pink, fancy intense pink, fancy deep pink, and fancy vivid pink. So it's the fifth best color. It's barely over a carat. The experts at Sotheby's said the diamond was going to sell for about $500,000. It sold for $1,426,500. How in the world is that possible? I mean, is it that the people at Sotheby's don't know what they're talking about? That's the furthest thing from the truth. They are very sharp. These are some of the top analysts in the world, and they know what their diamonds are worth. It's just the state of the times. It's the times that we're in. I've suggested for many, many years now. In fact, I wrote the first article on rare colored diamonds, the best kept secret, and from that point on, these diamonds have taken off on a life of their own. A light pink diamond sold for triple what it should have sold for. Here's another example, a fancy intense orangey pink diamond pendant. Again, nothing spectacular. A beautiful diamond, was supposed to sell for $350,000, sold for $770,000. There was a fancy yellow diamond ring that was supposed to sell for $60,000, ended up selling for $182,000, triple what it was supposed to sell for. So these are the type of diamonds that I've been recommending to you for the last decade. But the fact is that our diamonds that we're offering to our clients are of a very high nature. All of our yellow diamonds are flawless. So they go for a fortune, because those are the diamonds that go up by 25% a year. They double every 4 years. But here's the exciting thing. During times of high inflation, you're talking about a diamond that went up 500% in 2 years. Again, a $20,000 yellow flawless diamond today in 5 years can be $100,000 to you. And The fact is that we know that inflation is coming. We deliver these diamonds directly to you. Many of our clients put them into beautiful diamond rings or necklaces that sell for even more at auction. So the fact is that if you're looking to retire comfortably one day, you don't put your money in the stock market anymore. You know what happens. In 2008, the stock market plummeted 50% and took away everybody's money. And it happened in 1999. And it's probably going to happen again at the end of this year when the Bush tax credits die out. So the fact is, there are certain assets that you can depend on. They're going to do extremely well. And here's the proof of it. Just look at the Sotheby's auction. A fancy light pink diamond, nothing special, sold for triple what it was supposed to sell for. That, to me, is a return on investment. And with inflation coming, and knowing that these diamonds can go up 500% in 2 years, like they did in 1979 and 80, well, I have diamonds starting at $15,000 and going all the way up to $55 million. Most of our clients that invest under $100,000, but for $20,000, you could buy a magnificent yellow flawless diamond over a carat, put that in your safety deposit box, or put it into a beautiful ring for your wife, and next thing you know, in 10 years from now or 5 years from now, we're selling that diamond for you for 5 times what you paid for it. So it's a very, very exciting asset. The pink diamonds that come from the Argyle mine are amongst the best investments you could make because 90% of the pink diamonds in the world, actually 95%, come from the Argyle mine. And the mine is going to close down and there will not be any more pink diamonds. In fact, 95% of them will be gone in the next 5 to 6 years. Hold on to these diamonds for a couple more years so there's no more pinks around and see what happens to the prices. They can go up 10 times what the prices are today. So again, if you feel that you've missed the moves in the gold and silver markets, you haven't, okay? Gold has gone up. All it's really done is confirm that Randy and I know what we're talking about. One of the best investments you can make and the safest investments you can make is in the rare colored diamond market. They never go down in value. They double in price every 4 years. Certain diamonds, yellow flawlesses, Argyle pinks can go up 10 times what they are today over the next 8 to 10 years because they're going to be gone. And the beautiful thing is that these assets, because there's so few of them available, have never, ever fallen in price. So it's not like a stock or a commodity that trades on an exchange where you have buyers and sellers that make the prices go up and down. There are so few of them available that, again, it's at this point a supply and demand situation. The demand for diamonds is extremely high and the supplies are minuscule. I've invested a fortune of my own money into the diamond market so my clients and listeners to the radio show will have something to invest in. So if you go to rarecoloreddiamonds.com, my website, rarecoloreddiamonds.com, you're going to see museum quality pieces. You're going to see the highest grade Argyle pinks that you've ever seen. These are the most magnificent diamonds that will literally take your breath away. We've got yellow flawless diamonds more than anybody in the world because we cut 85% of the yellow flawless diamonds in the world today, and almost all of those go to our clients in Canada. So, these diamonds are so safe that these are the diamonds that I've given to my 2 young grandchildren, put away for their future. So, again, if you look at your RSP every month and you see that you're not making any money in your retirement funds and you're down on it because, all of us want to retire one of these days, look at a diamond. Put a $20,000 diamond into your portfolio, and in 10 years from now, that diamond's going to be worth $100,000. Now, the other question is, how do we sell it? Because the fact is, it's great to own a beautiful diamond, but where do you sell it? I mean, you've got Christie's and Sotheby's, but Christie's and Sotheby's tend to deal in, the highest price diamonds in the multi-millions. Is there a secondary market to resell these diamonds? There never, ever has been before, but we built it. We built the secondary market because we realized that was the one thing that was missing from the diamond market. It's a great investment, but how do you ever resell your diamonds? If you bought a diamond from a jeweler and 5 years later you took it back to that jeweler, he's going to buy it back from you possibly for less than what you paid for it, even though the diamond went up substantially in value. We built 8 Siegel Fine Auctions. It's hsfineauctions.com. It's the only live, real-time auction site for colored diamonds and for very high-end collectibles. We sell very high-end gold and silver and platinum coin sets. We sell emeralds, rubies, and sapphires, and we sell very, very rare diamonds. And we built this site for our clients to resell their diamonds. And we've had many auctions so far. All have been tremendously successful. Probably one of the most successful things I could tell you is that last year, Oprah Winfrey took 100 women to Australia, and she took them to the Argyle mine where these magnificent pink diamonds come from. And she gave each one of these women a beautiful Oprah pendant made out of little pink Argyle diamonds. A woman contacted me, and she was in desperate need of money, and she needed to sell or auction this diamond pendant off, and she wanted $7,500 cash for it, is what she needed desperately. We sold that for $42,000. That's how well the auction site did. So the bottom line is that we have created exactly what you needed, a phenomenal market in the colored diamond market, and we've also created the secondary market for you to resell it. And by the way, my company only does well when you do well, and that's the way business should be. If you recommend something to a client and they don't do well, do you really deserve to profit from that? What we do is that we only profit when you profit, because we get 10% of the profit on your diamond. So if you bought a diamond for $20,000 and 5 years later or 10 years later sold it for $100,000 and made an $80,000 return, we get 10% of the $80,000. So that's how we make our money. If we don't do well for you, we don't do well for ourselves, and we've wasted everybody's time. But I can assure you, I've been in business 35 years. I know the gold and silver markets, oil markets, currency markets, and diamond market better than almost anybody. And again, the best proof I can give you is a fancy light pink diamond that's worth $500,000, according to Sotheby's, sold for $1.4 million. That's why you need to be in the diamond business.
One other auction result, lot 157, a platinum 18-karat gold and fancy yellow diamond ring. They were saying around 110,000, went for 134. So yes, it was a very successful sale. If you would like to get those auction results, speak with Harold. rarecoloreddiamonds.com, or connect with him at 1-800-432-1022. Some of the other stories that we have in our newsletter this week, and you do want to get our newsletter from Harold or worldwide, we have a weekly newsletter, we have a monthly diamond newsletter, and a couple of stories we don't have time to go through here, but you should, because they're critical for your knowledge. Chinese and Indians buying pink diamonds as rarity clicks, according to Rio. That was Rio Tinto. That was a story from Bloomberg that we had. Also, Rio Tinto exhibits a $6 million Argyle Empress necklace. We have that story. The journey of the glamorous pink diamond, a story out of Australia. And we have a story that is a must-read from India, a rainbow of diamonds. Rupa Venkatkrishnan, a financial advisor, says colored diamonds can be a good long-term investment as the prices of diamonds continue to appreciate. She further says that the prices of colored diamonds have doubled in the past 2 decades, and if one is to go by their recent history, they are probably one of the safest investments to make. That is a story out of India. And we have a story on the Archduke Joseph diamond, which is a 76-carat gem. Now, this is a white diamond, and in Geneva, they're going to be auctioning it off Christie's November the 13th. It was originally sold, actually, about 19 years ago, November 1993. It was sold for $6.5 million. They're looking at a price tag of up to potentially $25 million. So, Harold, sure, this is a white diamond, not a colored diamond, but you deal in white diamonds as well, the rarest of the rare white diamonds, but not a bad return when you're buying something in 93 for 6.5 and potentially getting 25 million. Here we are 19 years later, a very nice return, Harold.
Oh, you better believe it. Again, diamonds are the safest investment, rare colored diamonds, and there are certain white diamonds that have gone up tremendously, which we also offer, which are D flawless whites. They represent 0.001% of the market. They're extremely rare. D is a colorless diamond. Flawless is flawless. They're perfect diamonds. Ours are triple X's, means they're excellent in every category. And last year, these diamonds went up 45%. I've got some some D flawless whites starting at about $10,000 or $15,000, and they're amazing investments. Again, this is an area that you definitely want to put some money away, because if you're reading all the headlines, if you're listening to what some of the top experts in the world are saying, again, even with President Clinton talking about interest rates going ballistic. Again, these are brilliant people. In order to be the President of the United States, Clinton was a brilliant man. The fact is that there's so many things that can go wrong because of the greed and stupidity that happened back in the 90s and is affecting us now with currencies and countries going bankrupt. Where do you put your money? We've never been in a situation like this where countries are on the verge of bankruptcy in Europe and in the United States. So, again, let's be smart about this. It's not the name of the investment. It's what's going to give you the biggest return with the least amount of risk, and that's the rare color diamond market and the deep flawless market. We very strongly recommend you look at silver at these levels. It's a tremendous buy. We think silver is going to go into the triple digits. It's a phenomenal buy at this point and very affordable, and the rare color diamond market is on fire, and we're the only company that has supplies of pinks and yellow flawlesses and has a way to sell them for you. No other company has an auction business that can resell your diamonds, and we're the only company that will do that for you.
RareColoredDiamonds.com. RareColoredDiamonds.com is the website. Telephone number to connect with Harold, 1-800-432-1022, 1-800-432-1022, and speak with him about our featured diamond this week, a 0.41 carat emerald cut fancy purplish pink Argyle diamond. The Argyle tender is underway around the world as we speak. You don't need to wait for the tender. Speak with RareColoredDiamonds.com about getting a diamond today. And obviously, those emerald cut fancy purplish pink Argyle diamonds are going to potentially skyrocket in value as the Argyle mine shuts down in a few years. When they're producing 90 to 95% of the world's pink diamonds, that mine shuts down. Obviously, the pinks that are out there today are going to be worth a lot of money. The stories we have in our newsletter pretty much focus on pink diamonds. Get our newsletter from Harold, RareColoredDiamonds.com, or call 1-800-432-1022. Harold, we should speak about the auction site because in October you will have more auctions. You're already starting to line up some of the items that you're going to feature. And if people have never been a part of the auction, it's time to get set to do that in October.
You bet. It's going to be around, around the end of October. We'll certainly announce the date on the show. They're spectacular auctions. We offer some amazing gold and silver coin sets and beautiful diamonds. Again, at this point here, none of our clients are selling. Everybody is buying. So I'm actually offering some of my own inventory and my own collection because it's imperative that we get our auction site extremely popular. We've had 7 or 8 auctions. They've all been tremendously successful. 90 to 100% of the items have sold. We will let you know how to register. You can actually watch the auction without participating if you want, but it's one of the most thrilling things you've ever seen or participated in, and we have clients all over the world to bid on diamonds. We have clients in Europe because their currency is stronger than the U.S. dollar, and they're picking up bargains. And the Canadian dollar is stronger than the U.S. dollar, which means that you can pay with Canadian dollars and save 2% at this point. So it's all good. It's a phenomenal time for us. Our clients are doing extremely well. The diamond market is going to skyrocket again with inflation, and all we want is for our clients to do well.
Speak with Harold about Rare Color Diamonds, RareColoredDiamonds.com. The telephone number, 1-800-432-1022, to invest in precious metals. Speak with the company that he recommends. They're out of Vancouver, been in business over 10 years. Their website is wwpmc.com. The name, Worldwide Precious Metals. Their telephone number, 1-866-623-2002. And one of the events in the U.S. election for president is coming up at the beginning of November. This week, coming up, they'll have their first debate between Romney and U.S. President Obama. It should be interesting. But everyone seems to feel that after the election in November, that's when the green light will be given for Israel to go after Iran and their nuclear program. In our geopolitical section of our newsletter, obviously, we had different world leaders speaking at the UN in New York this week. U.S. President Obama was one of them. Benjamin Netanyahu, the Prime Minister of Israel, was one person that spoke, and he said that he's drawing a red line on the Iranian nuclear program. You can read that story in our newsletter. They have had enough. They want something to be done to stop Iran from getting a nuclear weapon. Obama, actually, when he spoke to the UN, said that they won't let Iran gain nuclear weapons. And I don't really blame them. In New York, defiant Mahmoud Ahmadinejad said Israel will be eliminated. That's what he said when he spoke in front of the UN. So you can see it's a very dicey time geopolitically. And obviously, we're not even talking about situations in North Korea or other conflicts around the world. But the situation between Israel and Iran is one to watch after the U.S. election. And Harold, we have about 4 minutes left here. That is something that could really rock the stock market, although hard assets should do very well in that environment.
You bet. Again, it's another situation where again, markets are traded on the stock exchange or on the commodity exchange where you have different views, a buyer and a seller, where in the diamond market that doesn't exist. So, again, that's why you get the volatility in the market. Obviously, at the end of the year, what we're most concerned about is the Bush tax cuts coming due. And if they are eliminated, which is a very good chance they will, there are predictions that the stock market, that the Dow could drop 30 to 50% again. So be very cautious of that. When you've got most of your money sitting in paper assets and in stocks and those type of things happen, they can wipe you out. Very depressing situation. Why in the world do we want to put ourselves in that situation? Why, if the risk is at an extraordinary high level, do we want to put ourselves in that situation where we could lose almost everything that we've worked for? Let's be smart about this and conservative. We're not in a bull market in the stock market. The countries are going bankrupt. There's no way that we're in a bull market. All you have are these hedge funds in the markets right now trading for the sake of a few points here and there. There's no technicals or fundamentals in the stock market at all. Every market has its time. Now is the time for hard assets, gold, silver, and diamonds, and it's obvious. Just look what's happening with the prices, where, again, the stock market could plummet at the end of the year, and if you're in that market, you're never going to get out at a good price. So let's be smart about this. Gold, silver, with a major emphasis on silver because of the price, and rare colored diamonds, the pinks and yellow flawlesses, you're going to see that the markets are going to fly and give you the returns that you need to fight inflation.
And Harold touched on what they're calling the fiscal cliff, the U.S. fiscal cliff. As the worst euro fears continue, the U.S. fiscal cliff looms. The Eurozone has sort of stepped back a bit from the brink of disaster for now, although Spain may need a bailout. But the global economy could be staring into another abyss if U.S. politicians fail to head off the $600 billion in automatic austerity that all but guarantees a new recession, and that includes the tax cuts Harold touched on. We have stories about the fiscal cliff. They're talking about a 3.8% drag on GDP, 30% stock market plunge. In fact, Citigroup thinks they could be a 20% stock market plunge. Goldman Sachs is very concerned about the fiscal cliff. That is something that you should be aware of. One of the stories that is a must-read, in my opinion, in our newsletter this week is in the debt and deficit section. Bob Woodward, famous for All the President's Men during the Nixon era, has written a book, and he said a fiscal day of reckoning is coming to the United States. And the thing that's amazing to him, neither U.S. President Obama or Mitt Romney are really talking about what they would do about it. Another article from the Wall Street Journal, the magnitude of the mess we're in. The magnitude is simply stunning. And a story from CNBC, the Fed virtually is funding the entire U.S. deficit, according to Larry Lindsey. The latest round of Federal Reserve stimulus is risky and leaves little room to maneuver should another crisis hit, according to Larry Lindsey, who's an economist. He said that the Fed purchasing at least $40 billion a month in mortgage debt through QE3, they're all but entirely buying their own deficit. Harold, we have about a minute left here, and that's another aspect to what we're talking about, and that is debt and deficit, not only in Europe, but the United States is in severe trouble. There was a story this week, we have it in the newsletter, that they're equating the UK to Greece as well. So a lot of financial landmines. It's a time to have your own financial firewall and have hard assets. About 30 seconds left.
You bet, Randy. And again, rather than confuse ourselves and worry ourselves, everything that we just spoke about today can be answered in one word, which is inflation. All the situations that are happening around the world will result in high inflation, and it appears that the Federal Reserve is willing to put Band-Aids on open heart surgery just to try to get through now and deal with inflation 5 years from now, to me, is a huge money-making opportunity and something we should definitely take advantage of.
Thank you very much, Harold Siegel. Have a fantastic 30th anniversary.
Thank you very, very much. I wish everybody a wonderful weekend and a very, very profitable day, and thanks for all the good wishes, everybody.
And I should mention, as we talked about on past shows, governments, they will either inflate their way out of this or they will default. So inflation is pretty much the only option for them. Connect with Worldwide Precious Metals to invest in precious metals. wwpmc.com. Telephone number 1-866-623-2002. On the diamond side, rarecoloreddiamonds.com. Telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.